And we're also getting some breaking news out of the New York Fed. For that, we'll turn to Steve Liesman. Hey, Steve.
Carl, good morning. Much anticipated inflation expectations numbers from the New York Fed, and they are mixed for the month of March. I'll go through them now. The one-year inflation expectations were unchanged at 3%. It's good news amid higher oil prices and other commodities. They were unchanged, but they have been stuck at this 3 number for 2 months running now. Not sure how much concern there'll be on the part of the Fed. The 3-year expectations up 0.2 to 2.9%, while the 5-year declined to 2.6. I think last month was an aberration at 2.9. It's now down more near its long-run average. However, before you get too excited about that, the New York Fed saying expected price changes increased for all goods in the survey, and there are some hefty ones. For example, rent went up by 2.6 percentage points to 8.7. Remember, we're looking for that to come down. Medical care up more than a percentage point. Food up and gas up as well. Interesting. These are separate questions. They ask about overall one-year expectations, then they ask about individual prices over the next year. Unemployment expectations remained low in this. That's good news. But concern about job loss rose to the highest level since October 2020. It is up for a second straight month and now above the pre-pandemic level. That is concern about job loss. The probability of missing a debt payment, we've been watching that pretty closely. The issue of delinquencies rising to the highest level in 4 years. All of this happening in context of lessening certainty about a rate cut. We're now, dancing around that 50% line. We're at 51% now for June. We had been below 50 this morning. It's down from 65% before that strong Friday jobs report. July, I'd say, is also a little bit in play here, now at 69%, down from 80%, Carl. So a lot of things in motion now. The Fed watching this inflation expectations number to get a gauge on whether they're winning the battle of the psychology of inflation, and they seem kind of stuck at this 3% level.